The point is, as I was making money, which, lucky enough to do, you start peeling off risk, but leaving exposure. So that's what I call the tail, leave the tail. And it was rewarding. So as the market was rallying and I was peeling off risk, I maintained the slope of the ascent with less and less risk. Why?
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. It's 5:48. I'm headed on the road and we'll be out of town for the next 4 or 5 days, so no morning rundown. And I'll throw some things at you. Just want to give you some perspective. I don't think we're by any means done in this move. It is going to be a marathon of sprints. And that means in a marathon of sprints, there are big downtimes, sprint, break. And I think there's no better way. I've been through everything in terms of market environments, and I've even been through this before. But I haven't been through this before with a disciplined risk management style. By that, I mean, in the past, I would let those profits run forever and then give 50% back when things went against me. And then for some reason, I'd close it out because I was nervous and the market would go back up. But I'm going to give you some perspective on what it means to be disciplined now. And it's quite lucky. It's not a bragging point. It's more of an explanation of what happens. The rule in volatility is, the more volatile market is, the smaller your position should be. The less volatile market is, the bigger your position should be. So for the last 30 days, my speculative portfolio is up 87% for the last 30 days. And for the last 10 days, of that 80%, 50% were made in the last 10 days. Now, everyone has something similar to that going on that has a position on. There's no doubt about that. But you probably have even bigger returns. So let's say everyone here has an 85% rate of return for the last month. You guys probably have even more in the last 10 days because things have just been so parabolic. Here's what I'm getting at. Of the 84%, 50% comes in the last 10 days. But my position was 1/10 the size. Okay, now admittedly I used leverage, but what I was leveraging was slightly out of the money calls versus in the money calls. The point is, as I was making money, which, lucky enough to do, you start peeling off risk but leaving exposure. So that's what I call the tail, leave the tail. And it was rewarding. So as the market was rallying and I was peeling off risk, I maintained the slope of the ascent with less and less risk. Why? Because if there is no shutdown, or the shutdown is undone, all those things that never should happen but end up happening, we have a 10% drop. And I always pour water on bull markets. That's only because I know that we're all cheerleading right now. We're all happy for each other, and I'm certainly very happy for you. And look, I would not have started Goldfix if I didn't think this would happen. Just there, so you know right away. Right? When COVID happened, I said, it's over. It's over. It's going to have to change. And so I started Goldfix. And these morning meetings that we do are essentially risk meetings that I used to do with traders that worked for me. Anyway, so I'm just doing to you what I did to them now. And that is, the more money you make, the more money you take off the table, but you leave yourself exposure for upside. So right now, looking at my exposure, my capital exposure, I'm risking only 5% of the 90% call it that I made, right? So let's say it's $100,000. Let's say I made 100%, right? $100,000 goes to $200,000. I'm only risking $10,000, right? 5 to 10%. It's really 10%. The point is, I can only lose that $10,000. Now, you may want to express that with a stop loss, on a mining share, or by buying calls. Now, some of you aren't familiar enough with calls to do that, and I understand that, and you shouldn't. But the point is, you can risk less and make more now. Now, the flip side of that is if you're not trading, or you're not looking at the short term, or you don't need the money, then you don't give a shit, okay? You don't give a shit. Because miners up 100% gets them back to fair value as an undervalued stock. See, the higher gold goes, right? The higher gold goes, the more profits they make, which is obvious. But see, this is where the Wall Street kicker comes in. The higher gold goes, the more profits they make. The more profits they make, the lower their PE is, the lower their profits to AISC, the lower, like everything is too low. And so they're going to start buying it not because of gold going up. They're going to start buying it because their beloved math formulas say it's cheap. And that's what's going to happen next. And that'll be a 5-year bull market, at least. It's crazy, but I'm praying for the shutdown to end because I don't have enough miners. I basically have a big position in one miner, and it's lopsided. So anyway, have a great day, and Godspeed. Again, no morning meeting tomorrow, and possibly Monday as well. I'll be traveling. Good luck, guys. Oh, and the chat room, look, it's a work in progress, okay? I mean, I'm trying to figure it out. It's not as good as Discord. I'm familiar with Discord. I used to be a gamer. Clash of Clans, I was on the American team. Very funny stuff. But anyway, yeah, so we're going to work on that. And that's it. Try and figure it out for me, and we'll tighten it up. Have a great day.
Well, thank you, Vincent, and thank you watching at home for another fun week of coverage here on the Arcadia channel as we watch the wild action in the gold and silver market. So hope you've been having a good time following along at home. And also a quick update before we wrap up, because we did have some drill results out of Dolly Varden Silver yesterday, as Dolly has drilled 3.34 grams per ton gold over 120 meters, including an intercept of 216 grams per ton gold over 0.52 meters, and 166 grams per ton gold over 1.3 meters, and that was at step-out drilling at their Homestake silver deposit. And as Sean Kunkin, the CEO of Dolly Varden, who you've seen several times on the show, mentions that the results from this step-out drill hole at Homestake confirm that the deposit's continuing to grow beyond the current mineral resource estimate and demonstrate the strength of the high-grade gold system, which is potentially a separate and overlapping event from the high-grade silver mineralization at the deposit. We'll look forward to checking back in with Sean again soon, although they did also announce a $30 million bought financing deal. And I can say from some of my conversations with the mining executives recently, there is now a lot of money starting to flow into the mining stocks. So something to keep in mind, especially should we see this rally continue on. Money is already entering the sector. I would expect that to continue, and Dolly Varden has announced a $30 million bought financing deal. Although for a little bit more on the drill results, well, we have a short recap of those coming up your way now.